Good afternoon, and welcome to Pay Entry's weekly webinar. This week, we're going to talk about independent contractors or employees. Which is which, and do you have yours classified correctly? Um, my name is Kathy Graham, and I am head of the HR services area at Pay Entry. You have a place on your screen in your box where it asks you, or there's a place for you to ask questions. If someone could let me know if you can hear me right now, so that I am not just babbling to myself, that would help. And if thanks Melody for letting me know. If we have any technical difficulties, if you could please let me know, because I do experience internet problems here at my home, and working from home has its advantages and disadvantages. One is the fact that your internet is not as reliable as one in an office building. So please let me know if there's any difficulty with the slides or with being able to hear me. Thanks for coming today. Let's get right into it and just talk about, in the first place, why should you care if they're independent contractors or employees? We're going to talk about who makes the rules, how to determine a worker's status, how to correct misclassifications, and how to stay in compliance. So that's the overview of what we're going to talk about today. So first of all, why should you care? Employees are paid a wage. We're going to go over the basics. First of all, employees are paid a wage or a salary for a predetermined number of hours weekly and may be entitled to overtime pay if they're hourly, which is the non-exempt staff. The rules for employees require that you pay federal, state, and Social Security taxes, also some unemployment, workers' comp, and other things that are mandatory for employees. In most cases, your employees are entitled to some kind of benefits, regardless of whether they're full-time or part-time. Some companies do offer part-time benefits of some sort, like holiday pay or vacation or sick. Maybe not in access to your health insurance, but other types of benefits. And employees who stay a while can achieve increasing those benefits based on their length of service. There's a lot of vacation plans and sick leave plans are based on how long you've been there. As far as independent contractors go, though, they're hired for a specific project or a job of very limited scope and duration. This person may work for multiple companies at the same time that they're working for you. They are responsible for paying their own taxes, and they do that usually on a quarterly basis themselves. They're not eligible under your contract to participate in your employee benefit plans because those are set up just for employees under ERISA law. Independent contractors can decide when they want to work and when they don't want to work. And they can actually realize a profit or a loss in their business. So it's important to know there is a distinct difference between the two. What happens if you misclassify someone? And it is done a lot. It's very expensive for an independent contractor who should have been classified as an employee. You as the employer can be subject to penalties, which would be 20% of all wages paid, 100% of the FICA taxes, that would be the employee and employer share. There are also criminal penalties associated with this. So it's up to $1,000 per misclassified worker and a year in prison. So it's actually something you can go to jail for. And a lot of these Department of Labor and IRS regulations, especially the IRS, will send you to jail in a heartbeat. It would involve that you retroactively enroll them in your employee benefit plans, which would be an enormous nightmare to get them in your health plan and in your 401k plan and made whole, basically brought to current as far as the benefits that they would have gotten during that period of time. In addition, you would owe back pay and penalties for any overtime that they had worked and not were not paid for. So this is very, very egregious. And someone just asked if there's going to be a handout for this webinar. I am so sorry that I didn't mention this up front. I will be sending you a copy of this PowerPoint after the session is over so that you will have something to refer back to. So yes, there will be a handout. So who makes the rules on this? A lot of different agencies do, but the primary two are the IRS and the Department of Labor. They jointly create and monitor these rules. But then your state, like if you're in California, obviously they have lots more rules than the normal states. Um, and the National Labor Relations Board can also create specific rules for their jurisdiction. The National Labor Relations Board controls union contracts, and states like California will also apply different rules on top of the federal laws that are out there to make them even more stringent. The IRS is the first group we're going to talk about that makes the rules. And why do they care how you classify individuals? They care because of taxes. It's very simple. Employers don't pay payroll taxes on independent contractors. And that's why a lot of employers do this. They want to avoid paying the FICA tax, the unemployment, the workers' comp on these individuals. It makes their payroll less expensive. And that's what the IRS is trying to make very clear to employers, is that that may not be the best way to do things because they're supposed to be paying taxes. The IRS has two tests, actually. One is older. It's called the 20-factor test. And there's a more recent test called the 3-factor test that has been put into place that is commonly used. But what it does is it groups the 20 factors into 3 groups. And so you can address it by category. The 20-factor test asks questions about these 20 things. Instructions, how much training you provide to the individual. If you hire an independent contractor and you have to train them to do the job, then they're not an independent contractor, because independent contractors are normally individuals who come in and are experts in their field, and they're there to create and complete a special project. Kind of like a painter. If you hired a painter as an independent contractor, you're fine. They're going to come in and paint your lobby, and they're going to send you a bill and leave. That is an independent contractor. The another thing on this 20-factor test is the continuous relationship, and we'll look at this a little bit more, but that means that when you're hired not indefinitely with an employer because it's based on performance, but you are hired indefinitely, not like an independent contractor that is hired for a specific time or project. The things like how you pay them, um, expenses, do they take care of their own expenses? Do you provide the tools and materials, or do they? The investment that they have in their business, and whether or not they can realize profit or loss. These are some of the things that come into play in the 20-factor test. And I have a sample of that later in the presentation. Right here. Excuse me, I moved it. So yes, there it is. This is a little, just an overview. It groups these into 3 groups: control factors, financial factors, and relationship factors. And so if there is an X in the box, you go through this and you have the contractor box checked for, say, employer provides training to worker, then that is a sign that that is not an independent contractor, because it should be the employee. This tells you how the IRS would look at each one of these factors. If they work off-site, it's an independent contractor. If they work in your facility and there's someone supervising them, It would be an employee if they have regular work hours. And if you set those work hours, basically, if you tell them where to be, when to be there, and you give them the tools to do the job, then they are not an independent contractor. The IRS, this shows on the chart that we just looked at, they've grouped the more relevant factors into a three-factor test: behavioral, financial control, and relationship of parties. Under behavioral control, the worker is an employee and not an independent contractor when the business has a right to direct and control the work, even if you don't exercise that right. Um, if you tell them when and where to work and what tools to use, if you have to train them or give them some instruction on how to do the job, if you evaluate their progress and measure the details of how the work is done and train them how to do the job, that is an independent contractor. Under financial control, if you they look at how much investment and equipment the worker has set up for themselves. If they have their own systems and equipment and they've invested quite a bit in that, then that is, you would not ask an employee to come to work and bring all their tools with them. That and unreimbursed expenses, normally the employee is reimbursed for their expenses, and independent contractors are not. If there is an opportunity for profit and loss, which we mentioned, and if they provide their services to the market, to others out there, they advertise their services, and they do work for many people or other companies, then that has a true impact on the financial control and that part of the test. And method of payment. Now, if you're doing it wrong, obviously you could be paying an independent contractor. You pay them by the invoice. You pay your employees on a set payroll schedule. And then the type of relationship is the third category. If you have a written contract that describes the relationship, you provide that person with employee benefits. The permanency of the relationship is very important too. Is there an expectation that employment will continue indefinitely rather than for a specific project or period? And are the services, and this is becoming an even more important criteria in many states, are the services provided already a key activity of the business? For example, if you hire someone to drive a truck, but you own a trucking company, that person is not going to be an independent contractor under the law because trucking is your business. If you're hiring someone to drive a truck, you already have lots of employees that do that same thing. There have been several Supreme Court cases on that type of situation where someone and even FedEx was involved in that. They were hiring independent contractors to sub in on the routes, and this is not the case. They are a delivery company. So if they hire someone to deliver their packages, then that person is not an independent contractor. They are an employee. So the second group or agency that cares about independent contractor status is the Department of Labor. Misclassified employees, and why do they care? Because misclassified employees are denied access to benefits and other protections that they're entitled to by law, such as minimum wage, overtime, family and medical leave, unemployment insurance, and a safe workplace under OSHA. Employee misclassifications generate substantial losses also to the federal and state governments in the form of lower tax revenues, as well as state unemployment insurance and workers' compensation funds. So, because the companies, if they have independent contractors, are not paying into those funds. The Department of Labor considers several factors to determine employment status, and some of them cross over with the IRS um, details. The extent to which services rendered are an integral part of the company's business, as I mentioned, the trucking company, how permanent is the relationship or long term, how much is the contractor actually invested in their own facilities and equipment? Do they really have a company that they own and run? The nature and degree of the control by the company, their ability to suffer a loss or profit in the contracts that they take on, the amount of market competition, that is, if they're marketing themselves and are selling their self on or their services on the website, and the degree of independent operation and organization. So do they have their own staff that has, then they have an accounting department and things of that nature. And then various states, on top of the IRS and the Department of Labor, states have adopted a rigorous three-part test. It's called the ABC test. I believe California was one of the first to put this in. It presumes that workers are employees unless these three things occur. They're free from control of the hiring entity. They perform work that's outside the normal course of the hiring entity's business, and they're customarily engaged in independent trade, occupation, or a business. And all three of those criteria must be met. So if you're in a state that uses the ABC test, I don't have a list of them here, but if you would like to do that, you can let me know afterwards, and I can check your state to see if it does apply. But all of these three criteria must be met if your state has that. And anytime there is a law that is more strict than the federal law, then you would use the more strict law. So California law supersedes federal law. So how do you determine a worker's status? There is a form that you can use. You don't need to mail it in, but you can, and they will tell you whether or not that person is an independent contractor. But it's IRS Form SS8, Determination of Worker Status. You can also get a copy of the IRS Publication 15-A, which is available as a PDF on the irs.gov website. It's the Employer's Supplemental Tax Guide, but it does have rules in there. So what if you decide you've got an independent contractor that's really an employee? How do you correct it? Well, first of all, there are three programs available. One is for employers not under audit, and this is an IRS, the Department of Labor and IRS have both. One for employers not under audit, one for employers that are under audit, and one for an employer that's had an audit in the past, but it hasn't been within the last 3 years. Sorry about that. That's a duplicate slide. Okay, the first of these three options involves the use of advanced determination of worker status, that form SS8. And it can only be used if the employer is not under audit, and it can reduce your tax liability to 1 year. So this is a good one if you have someone now that this has been happening to. You only have to go back a year and pay the taxes on that. I'm sorry, on their payroll for that period of time. The second option is called a classification settlement program. This is used if you're under audit, bless your heart. You can use this settlement program, and you have to be able to show that your position has been consistent throughout the time that that independent contractor has worked for you, or you had a reasonable basis for making that classification or assigning that classification. Maybe the person gave you a business license and said that they marketed themselves, and they only work as an independent contractor, but you had some reasonable basis to fall back on. The tax assessment here would be for one tax year and can be reduced if you request it. If you don't ask for it, though, they won't give it to you. I read that in the text, and that's kind of odd, but they will not offer it to you, but they will do it if you ask them. And that third option is called the Voluntary Classification Settlement Program. This is where the employer must not have been under audit for the past 3 years, and I need to change that, but within 3 years. The penalty is 10% of employment tax liability due on the compensation paid to the workers in the most recent tax year. So this is the most favorable of all. It's the cheapest way to fix the problem, and this offers the forgiveness of employees for prior years. So it only looks back 1 year. It's a 10% tax liability instead of a full, probably 20%. So this is the least expensive way to go. So after all of this, how do you stay in compliance? You need to stay on top of who's of the hiring managers, because sometimes a hiring manager, and we know in HR, will hire someone as an independent contractor and tell you after the fact. So you have to make sure that you have a policy in place that says that the independent contractor status has to be evaluated by HR and run it through the test. Um, and then as you go along, you make sure that any new independent contractors meet both the IRS and the Department of Labor tests and any state tests that you may have to comply with. In California, probably all you'd have to do is comply with the state test and you are going to be home free on this. But it's just staying on top of it and making sure that any independent contractor that is hired passes the test. It is hard because sometimes owners or managers want to hire someone because they can get the work done cheaper by paying them a flat rate to do something and calling them an independent contractor. In the long run, it would be more expensive for you than putting that person into an employee status. So are there any questions today? You can type them into your question box, and we'll wait just a few minutes to see if anyone has a question. Then if you don't have any questions for today online, what I will tell you is that you can contact me anytime. It is part of PayEntry's service to our payroll clients that you're able to call and talk to me and let me help you solve your problems, answer your questions, and help you with your needs. We do have an HR services division that if you have projects you'd like for us to do, we do that. We also have a virtual HR assistant offering, like your own HR manager online. That's very affordable for small companies. So we'd love to talk to you about that. And one of the things that we do as a project is help you determine if your employees or if your independent contractors are truly contractors or are they employees. Be happy to do that for you and under our HR services platform. So I will send you a handout of this presentation after this is over, and please let me know if you have any questions. Thanks for coming today and have a great afternoon.